Good afternoon to all of you. Let me welcome you to our seminar today on the highlights of the Central Bank of Sri Lanka Annual Report 2020. Today we have our guest speaker, Dr. Chandranath Amerasekera, who is the Director Economic Research of the Central Bank of Sri Lanka. We have our Vice President of CMA Sri Lanka, Mr. Hennayaka Bandara. We have our council members and also our participants. Today, let me thank Dr. Chandranath Amerasekera for accepting our invitation to deliver the address on the highlights of the Central Bank Annual Report 2020. Plus also he has agreed to give the current status, which I think which everyone is waiting to hear. So I must thank Dr. Amerasekera for agreeing to that. Just to say a few words about CMA Sri Lanka. CMA Sri Lanka is the National Professional Management Accounting Body in Sri Lanka. We are incorporated by an Act of Parliament. And in operation today is also this month is the 21st year of operation in Sri Lanka. You are all aware that we set up this management accounting body because there was no Sri Lankan management accounting body. And in order to provide our local students a professional qualification in management accounting at an affordable cost, and of course, saving the valuable foreign exchange to this country. I think that today it has really become a very, very scarce commodity and something in demand. And a decision that we took 21 years ago, not only to provide professional management accountants, but also the need for a Sri Lankan body, which will also save the valuable foreign exchange. So this is something that I suppose everyone should take note of, because Sri Lankan professional bodies are today now well recognized. We are members of the International Federation of Accountants, the global body for the management accounting and the financial accounting. The chartered accountants are members of the global professional body, plus also maybe another 180 bodies that are there globally, including some that are operating in Sri Lanka like SEMA and ACCA. So you must realize that Sri Lankans are of a very high caliber. They can deliver the goods, and both the government, the private sector should all have confidence because even the private sector, local bodies that are established in Sri Lanka, and that if we are to develop our country, then we need to have the national bodies that are there. So today, the Central Bank of Sri Lanka annual report. Now, you all know the importance of an annual report. Those who are in the private sector, this is the document that will really give the status of your company or organization, and you have to place it before your shareholders and the stakeholders. So the annual report of the Central Bank of Sri Lanka, which I think is a report of the economy of Sri Lanka. So this is a very, very important document. That's why we are today having this seminar to give the importance of the Central Bank annual report and the importance of the private sector, the public sector. They should know what they have really performed during 2020. And of course, it's not only sticking to the 2020, but also giving an update of what is happening today. So this annual report has to be not only studied, it has to be taken very, very seriously by all the government ministries, the government departments, the chambers of commerce, who are the captains of industry and commerce in Sri Lanka, to see whether they have really performed their part. Today, as you know, we are in a very maybe different situation. We are affected by the COVID-19 pandemic, but we are going forward. Just to tell you as to what we have done, we are in the, as I told you, in the professional education field. We have, like what we are doing for the seminar that we are having today, we have gone all digital. Our education has been digitalized. Our examinations have been digitalized. All our programs now, these are continuing professional development program. It is also digitalized. Our IT programs, IT that we are conducting in the classroom is digitalized. The Speechcraft program where it is mandatory for our students to become members is digitalized. So these are things that we have done in order to meet with the pandemic that is there. And I'm happy to say that all our students, all our members have accustomed themselves, especially the staff. They have now all digital savvy. We have given them the requirements that are there and then done it. So CMA Sri Lanka is really today on par with any of the professional accounting bodies in the world. We have digitalized. There are people who are following our programs in Dubai, in Abu Dhabi, maybe various other countries. I think many of them, maybe Australia and other places. So I think today the COVID-19 pandemic has changed us. They have given us challenges which we have really met. We have changed our ways of doing things and come up to the global standards that we are doing. So today, as I said, this very important seminar that we are having, Annual Report 2020. We have Dr. Chandranath Amerasekera here. I must also tell that Central Bank is represented, the Governor of the Central Bank is represented on the Council of CMA Sri Lanka. So I'm very happy that today we have been able to invite the Director Research, Economic Research, and he is supporting us. And similarly to the Governor of the Central Bank, we have Mr. Chandranath, the Assistant Governor, now serving on our council. So that's also another close association that we are having with the Central Bank and of course CMA. So just to maybe say a little about our speaker, Dr. Chandranath Amerasekera is a macroeconomics by profession and heads the economic research wing of the Central Bank of Sri Lanka as its Director Economic Research. He also serves as a member of the Monetary Policy Committee and Market Operations Committee of the Central Bank of Sri Lanka. Prior to joining Central Bank in January 2003, Dr. Chandranath Amerasekera worked as a research officer at the International Monetary Fund Sri Lanka office from 2001 to 2002. Of course, a product of Royal College Colombo, maybe I may be coming for a different school, but of course we all play in the Royal Tomian, so maybe he will know which school that I am. But he has performed. He was a very excellent student, carried away many prizes during his school days. He graduated from the University of Peradeniya with a first class honors in economics, won the gold medal for the first student, for the best student in economics, and the university scholarship for the best student in the Faculty of Arts. He holds a MSc Economics with distinction and a PhD Economics on specializing in monetary policy and labor markets, both from the University of Manchester, UK. So I think we have a very maybe excellent person, both in the academic area, now in the practical side, practicing it, and he will be able to tell us of the economy of Sri Lanka and also how it is faring now, and of course maybe some advice for us for the future. So may I now invite Dr. Chandranath Amerasekera to address us.
Thank you very much, Professor, for that kind introduction and for the invite as well. And I think I must start by congratulating CMA for the good work that you and the council members and the CEO and so on are doing to strengthen the professional capacity of the country. And we are looking at the game changer of Port City that we all have high hopes on, and I'm sure your products will play a key role in the port city, particularly the financial city, the financial center that we are expecting to be developed in the port city in the period ahead. With that, let me share my slides. I hope you can see them.
Yeah, fine. We can see. Yeah.
And as Professor Watavala said, we are talking about the annual report of the Central Bank of Sri Lanka, but it's actually an annual report of the Sri Lankan economy. If you look at I will give you the background. In the Monetary Law Act, there is a requirement that within 4 months after end of each financial year, the Monetary Board, or the supreme decision-making body of the central bank, has to submit to the Minister of Finance and also publish the annual report on the condition of the central bank and a review of the policies and measures adopted by the Monetary Board during the financial year, and also an analysis of the economic and financial circumstances which prompted those policies and measures. And that's exactly what we have done this year as well, for the 71st time since the inception of the central bank. And if you look at the contents of the annual report, there are 2 volumes. It was in 1 volume earlier, but things were getting a bit bulky. So now there are 2 volumes. And part 2 provides this information about the state of the economy and the required macroeconomic statistics for anyone to get an idea of what went on in the economy in 2020, and also what could be expected in the medium term, what we call the medium term. And in volume 2, I think as management accountants, you should also be interested in what's in our volume 2. In the annual report, the part 2 contains the accounts and operations of the central bank, information about accounts and operations, and then administrative measures adopted by the government and the Monetary Board during that particular year, and also the laws related to the functions of the central bank as well as financial institutions in Sri Lanka. And also, if I give a very brief intro to what's within these accounts and operations of the central bank, apart from the financial statements, you have the operations of each department of the central bank in this part 2. And if anyone's interested, they can go through them. And I'm sure there's quite a bit of information about what we do as a central bank as the central bank in the country. So with that, but in this presentation, I will focus on volume 1, part 1, which is essentially the state of the economy. And we published this annual report at the end of April 2021. So it's we are at the beginning of July. It's a bit dated. So as Professor suggested, I will try to give some information about recent economic developments as well. And if I don't cover anything, please feel free to ask anything during the Q&A session. So the state of the economy discussion is organized in 8 chapters in the annual report, and chapter 1 is the overview. And if one wants to get a bird's eye view of what happened in the Sri Lankan economy, chapter 1 is the best chapter to start with. And the other 7 chapters will give you more information about what is discussed in chapter 1. So I think I will have to read this because this is the main message of the annual report. So in chapter 1, or in the entire annual report, the key message is that the complex challenges encountered by the Sri Lankan economy in 2020 were efficaciously addressed through extraordinary policy interventions by the central bank and the government. And these interventions were essential to mitigate the socioeconomic impact of the spillovers of the COVID-19 pandemic and the resultant scarring of households and enterprises. And such interventions were also required to uphold the confidence in the economy, thereby averting acute stresses on macroeconomic and financial system stability. So there are so many questions asked even now about the policies that the government and the central bank adopted in 2020 and thus far in 2021. I would like to ask, I would like you to think about what could have happened if we implemented different types of policies. So that's a thought that I would leave with you. And at the turn of 2020, if you look at the situation of the Sri Lankan economy, so these at the end of 2019, we know that in 2019 we suffered the devastating effects of the Easter Sunday attacks, and Sri Lanka was making a very slow recovery, but amidst a very volatile political environment. And by the beginning of 2020, at the end of 2019, there was a lot of hope about Sri Lanka's imminent recovery. And it was also supported by political stability that we saw after the end of the presidential elections. So if you look at the year 2019, it was not a very good year. The quarterly growth numbers are given in this slide: 4% in the first quarter, 1.3% in the second quarter, 2.3% in the third quarter, and 1.6% in the fourth quarter. And as I said, when you look at the chart on the right-hand side, what you see is that the business confidence captured by this LMD Nielsen's Business Confidence Index shot up towards the end of 2019, and this is what mainly reflects the improved, sentiments that Sri Lanka would do well in 2020. But in 2020, we know that we faced the effects of we started facing the effects of the COVID pandemic. Even before the pandemic, the government and the central bank started providing policy stimulus to the economy. In terms of fiscal policy, I think we've been discussing about the sharp tax cuts that we saw from the end of 2019. And then from the central bank side, we saw a gradual accommodative monetary policy stance. Then came COVID, and Sri Lanka went into a lockdown during from March onwards for a couple of months. And the government and the central bank took several policy measures and also operational measures to combat the pandemic and its repercussions. There were health and community measures, which I will not talk about. Also, there were monetary, financial, and other measures. The fiscal stimulus I was talking about, it was strengthened, and also financial assistance was provided to needy families. Monetary policy easing measures were introduced. Working capital loans, liquidity facilities for construction sector and the other sectors, and debt moratoria and financial sector regulatory measures were also relaxed, so that the banking sector, the financial sector, could support the recovery of the economy. And in 2000, if you take the year 2020 and if you take the time until we finished writing the annual report in mid-April, the conditions we saw was that the first and the second waves of the pandemic were managed successfully and with comparatively less fatalities. And during the first wave of the pandemic, from March to May, there was a bit of chaos. No one seem to know what, I mean, in terms of functioning of businesses and other activities in the economy, there was, it was quite a gray area. But then the country adapted to work from home practices and other ways of working, and that improved the resilience against the resurgence of the pandemic. And by the second wave of the pandemic, we knew what to do. So the effect of the second wave was quite low compared to the first wave. And so this improved resilience is still helping us. But of course, as we know, there are challenges. So, so in spite of this resilience I'm talking about, significant macroeconomic challenges lie ahead. And that's also something that we wanted to highlight in the annual report. So managing the resurgence of the pandemic and its economic fallout was discussed in the annual report. Managing the sizable external debt service payments amidst limited inflows, and strengthening the domestic economy through far-reaching reforms, and also managing the timely rollback of fiscal and monetary policy support once the economic recovery process firms up. They were discussed in the annual report. Particularly when you look at the first point there, managing the resurgence of the pandemic and its economic fallout. By the time of finalizing the annual report, we did not have much information about the depth of the third wave of the pandemic. I will show you a graph about that in a bit as well. And this slide summarizes what went on in the Sri Lankan economy in 2020. Starting from the top left quarter of this slide, we know that the economy contracted by 3.6% in real terms. Investment expenditure declined, but the national savings investment cap did not decline by that much because of the support that we got from workers' remittances, the savings of Sri Lankans abroad. Unemployment went up. Inflation remained broadly stable, and co-inflation, what we call co-inflation, also remained low. The external demand contracted by 3.5%, and per capita GDP, which has been falling for a couple of years, continued to fall in 2020 with this contraction of GDP in 2020. And we ended the year with a per capita GDP of $3,682. Looking at the top right quarter of the slide, we saw merchandise exports reducing, and there was a policy-induced reduction in merchandise imports as well. So that helped reduce the trade deficit. We'll talk about that in detail. With the global pandemic, we saw foreign direct investments moderating. There were portfolio outflows from Sri Lanka as well due to uncertainties. The exchange rate depreciation was contained at 2.6% in 2020, and we know what happened to the tourism sector. But compared to what was expected, workers' remittances actually increased in 2020. Official reserves, we ended the year with $5.7 billion as official reserves. Looking at the bottom right of the slide, we know with the pandemic effects as well as deliberate policies of the government, the overall budget deficit increased from 9.6% in 2019 to 11.1% in 2020. And there were some adjustments in fiscal accounts, and they are also clearly articulated in Chapter 6 of the annual report for anyone who would want to get information about this restatement. Obviously, government revenue declined sharply, and for the first time to a single-digit level as a percentage of GDP. Recurrent expenditure with the COVID-related expenditure, recurrent expenditure increased, and capital expenditure had to be reduced to contain the budget deficit at these levels. Outstanding central government debt also increased from 86.8% in 2019 to 101% in 2020. But within this, we saw a very encouraging development, which was a reduction in the outstanding foreign debt to total debt ratio. So it declined from 47.6% to 40%. So essentially, although debt to GDP ratio increased, within that, the foreign exposure of the government declined, which is a comfort factor during a very difficult year. Looking at the monetary sector, which is explained very briefly in the bottom left, we know that interest rates were drastically reduced in 2020. And at the same time, there was ample liquidity provision to the government, to businesses and individuals, so that the burden of the COVID pandemic would be eased on businesses and individuals affected by the pandemic. And we saw a gradual increase in private sector credit, and also with increased public sector credit, there was an expansion in broad money growth as well. So that's the summary of what happened in 2020 in terms of the macroeconomy. And also in chapter 1, we talk about the medium-term macroeconomic framework. So this has been the tradition of the central bank to provide our projections for the next 5-year period. So if I start the presentation from there, the first line, according to the first line, we expected 6% economic growth in 2021. And yeah, so before anything else, let me take you through some of those numbers. We expected per capita GDP to be about 3,873 in 2021. The trade gap to reduce as a percentage of GDP to 6.2%, exports to be around 12.5%, and imports to be about 12.5 billion US dollars, and imports to be about 17.8 billion, giving us a trade deficit of about 5.3 billion. And so with that, we were expecting a current account deficit of 0.2% and official reserves sufficient for about 3 months, just above 3 months of imports, which is about 4 to 4.5 billion. In the fiscal sector, we expected, as envisaged in the budget also, we expected we expect a budget deficit of 9.4%, and the central government to decline to 98% of GDP. Broad money to remain at a high level, broad money growth at 21%, and private sector credit growth to be at 12.2%. Average inflation to be around 4.3%. That's for 2021, and you can see the trajectory for the medium term as well. But these projections were made at the time of the annual report went to the press, which was drawn here with that red line. So the annual report was finalized about a week before that, during the New Year time. It was published on the 22nd of April, and we have plotted that against the daily confirmed cases of COVID, and what you see immediately after that is the third wave of COVID. So luckily, the third wave is subsiding. We are seeing encouraging numbers now, but this magnitude of a wave was not expected, definitely in the medium-term projections, particularly for 2021. So obviously there will have to be revisions. I can talk to you about some revisions we are envisaging, but we'll have to wait for an official announcement from the central bank to get the new get an idea of the new projections. So going back to 2020, I said the economy contracted by 3.6% in 2020. And before this year, in the Sri Lankan post-independent history, Sri Lanka has seen a contraction only in 1 year, only in 2001. And of course, the conditions were different. This was mainly driven by the pandemic and the mobility restrictions that had to be introduced. And if you look at the quarterly breakdown of GDP growth, the economy is estimated to have contracted by 1.8% in the first quarter. Only about 15 days of that quarter was affected by the pandemic. So there have been disagreements about the central bank and the Department of Census and Statistics about some of these numbers. But official GDP growth figure for the first quarter is 1.8% contraction in Q1 2020. In the second quarter, with the lockdowns, the economy is estimated to have contracted by 16.4%. But then by the third quarter, there was again a lot of hope, and the economy grew by 1.3%. If you look at the growth rates of other countries in the region and in other regions of the world, even by the third quarter, you would not see a growth, except for a few countries in the world. But then came the second wave of the pandemic, and we ended the fourth quarter with a growth of 1.3% again. So we were talking about resilience earlier, and by the second wave, I think Sri Lanka was more prepared for another wave of the pandemic. And that's what helped Sri Lanka to record a positive growth in the fourth quarter. Obviously, we expected the higher growth, but that was not to be because of the pandemic effects. But still, with these quarterly performance, Sri Lanka's contraction was limited to 3.6% in terms of real economic growth. If I may remind you, I think several global agencies projected a higher contraction for Sri Lanka. If I give you an example, I think the World Bank expected Sri Lanka to contract by about 6.7% in 2020, but the official growth figure for 2020 was 3.6%, much better than what was projected by global agencies. So coming back to 2021, we know the effects of the COVID pandemic thus far during the year. Thus far after the pandemic, we've seen about 3,000 deaths and 257,000 cases. So compared to what's happening around the globe, those are very small numbers. But for a small country like us, we know that there are concerns about these as well. We are very concerned about these. And the COVID-19 vaccine progress is shown on the bottom right. And thus far, 3.58 million vaccines have been administered, which gives us hope that the vaccine drive is progressing well. And by the end of the year, I think there will be a return to normalcy if globally this vaccine drive continues, not only in Sri Lanka. Let me skip this slide and talking about 2021 a little bit. I said that in the annual report, we projected the growth of 6%. That was before the third wave of the pandemic. But obviously, it will have to be revised downwards. But we believe that when you look at the performance of the first quarter, again, we don't have the growth figures yet released by the GDP, released by the Department of Census and Statistics officially. But looking at the indicators available, you can expect a relatively high growth in the first quarter of 2021. Particularly, the index of industrial production during the month of March 2021 has recorded a historically high level. So that indicates that the industrial activity was doing well in the first quarter. So even if there is a slowdown in the second quarter, of course there will be, there is still hope for the economy to achieve a growth rate of about 5%. So some might ask why we are expecting 5% with a very long lockdown just finishing. I think in all countries, the economic growth expected for 2021 is based on the contraction that we saw in 2020. So you can plug in some numbers and see on that base effect of contraction in 2020, many countries would see a high growth in 2021. For Sri Lanka also, it's the same. And I think for all countries, the challenge is how to sustain this high growth figure that you will get in 2021 going forward. So another thing I want to highlight is what is on the bottom right, the annual comparison of data usage volume. This is something that we started collecting from since mid last year, because there was no way to capture what was going on in the economy because people were working from home. We wanted to get children were studying from home, so we wanted to get a picture of how those were functioning. And what we saw was that compared to 2019, there was a tremendous increase in broadband data usage in 2020, and that increase has continued in 2021 as well. So people are simply, hopefully, not wasting time from home. Hopefully, there is a lot of productive activity going on from home, although there are some sectors like production sectors, industry, manufacturing, and so on, which requires coming to work. Many others could function from home. That's a message that I want to deliver from this slide as well. Moving on to inflation very briefly. As I said at the beginning, inflation, the headline inflation, both the Colombo, the urban CPI, as well as the national CPI, they were around the range of 4 to 6% that the central bank wants to maintain. And within this, what we saw was food inflation was running at a very high rate. So on an average, about 10-11%. And we were again hoping that food inflation would subside. But what we have seen thus far during the year is food inflation, with the disruptions to the supply chain locally, has remained high. So in terms of the Colombo CPI, food inflation is now running at 11.3%, and the national CPI gives a food inflation rate of 10.3% at the moment. Although overall inflation remains subdued. So the CCPI-based overall inflation is at 5.2%, and NCPI-based overall inflation is at 6.1%. That's because non-food inflation is still at a relatively low and manageable level. I'm skipping a lot of information in chapters 2, 3, and 4 of the annual report and moving on to the external sector developments, because there is a lot of interest in external sector developments nowadays. We spoke about export earnings briefly. During 2020, export earnings declined by 15.9%. In the previous 2 years, export earnings were very close to 12 billion US dollars per year. It declined to 10 billion in 2020. So there was a loss of about 2 billion US dollars in terms of export earnings, merchandise export earnings. But when you look at imports, the government had to introduce several measures to curtail non-essential imports. Also, luckily for Sri Lanka and countries like Sri Lanka, oil prices declined with the global slowdown, and those helped us to reduce import expenditure by 19.5%. So export expenditure decline, export earnings declined by 15.9%. The import expenditure declined by 19.5%. And of course, import expenditure in Sri Lanka is a much higher number than earnings from exports. So obviously, this 19.5% allowed us to contain import expenditure at 16 billion US dollars in 2020. And also, as a result, the trade gap was contained at 6 billion US dollars from the previous year's 8 billion US dollars. The year before, the trade deficit was as high as 10.3 billion US dollars. So this is a persistent issue, very large trade deficits. We would have liked to see a continued decline in the trade deficit. Obviously, there will have to be policies to support a growth in exports and also rationalize imports. And so essentially, I mean, that's our expectation for the future as well. So the trade account is a large component of the current account, external current account. And when you think of the other components of the external current account, you have the services, exports and imports. And Sri Lanka's main services, exports and imports include tourism, and then IT BPO services and logistical services. So tourism, we know what happened in 2019. Tourism, even with the ISIS under tax, tourism sector earned 3.6 billion US dollars. In 2020, it came down to 0.7 billion. It's 700 million US dollars. And in 2021 also, contrary to our expectation, early expectation of about 1 billion US dollars from tourism in 2021, I think it will be a very low number. But for Sri Lanka, the peak tourist season happens towards the end of the year. And hopefully, if there is a recovery in global tourism by then, there will be some, we are still hopeful that there will be some inflows from tourism. IT BPO services did well. The earnings, these are probably underestimated. These are based on surveys. We earned about 1 billion US dollars from IT BPO services in 2020. And workers' remittances in 2019, we received 6.7 billion US dollars. The expectations of policymakers as well as the international agencies were that there will be a global slowdown in workers' remittances in 2020. But that did not happen, luckily for us. And workers' remittances increased to 7.1 billion US dollars in 2020, around a 6% increase. About tourism, if I may get back to tourism again, I think in 2018, Sri Lanka earned about 4.4 billion US dollars from the tourism industry. And if there were no ISIS under attacks and if there were no COVID disruptions, by now, I think the tourism sector would have exceeded 5 billion US dollars annually. So that's the sort of the loss of revenue as a country that we have seen. So with these, the current account deficit narrowed significantly, although in spite of the effects to the tourism sector, increased workers' remittances, and the narrowing of the trade deficit helped us to narrow the current account deficit. So the current account deficit for 2020 is estimated at 1.1 billion US dollars. That's 1.3% of GDP, compared to a 2.2% of GDP deficit in 2019. And thinking of financial flows, again, as I said at the beginning, there were disruptions to financial flows to Sri Lanka, to the government, to the private sector, and so on. The main financial inflows included 500 million US dollars from the China Development Bank to the government, SAC finance swap facility of US dollars 400 million to the central bank, and inflows on account of FDIs of about 670 million US dollars. And major outflows included the repayment of the maturing sovereign bond of 1 billion US dollars in October 2020, and also the outflows of foreign investments from the rupee denominated government securities market. And with these, official reserves declined, and we saw very large foreign debt service payments and limited foreign exchange inflows. And official reserves, as I said before, were at 5.7 billion US dollars at the end of 2020, which was sufficient for 4.2 months of imports. Talking about outstanding external debt of the country, Sri Lanka's total outstanding external debt stock declined in 2020, and that's what you see in the chart. And there were several reasons for this. The repayment of the sovereign bond of 1 billion US dollars that matured in October 2020, and there was a reduction in outstanding foreign loans obtained by the government. There was a decline in non-resident holdings of rupee-denominated government securities market, as I said earlier. There was an increase in the resident holdings of Sri Lanka's outstanding sovereign bonds. So, on the one hand, the secondary market yield rates of Sri Lanka's sovereign bonds in the international market went up because of the rating downgrades and uncertainties. But the local companies, particularly in the financial sector, they took that opportunity and invested more in Sri Lanka's sovereign bonds. So that reduced Sri Lanka's exposure to the outsiders in 2020. And also the external debt, when you value external debt, it's done at market value, and there was a significant decline in market prices of Sri Lanka's outstanding sovereign bonds. That is also a reason for this sharp decline in the external debt stock of the country in 2020. So in this slide, I'm talking about the external debt of the country, not the government. The government's exposure is much lower than that. I will give you the figures later. With these developments in the external sector, the Sri Lankan rupee depreciated by 2.6% in 2020. There was quite a bit of volatility in the exchange rate during the month of April, during the months of March, April 2020, and then again towards the end of 2020. But the overall depreciation was limited to 2.6%. And usually what happens is Sri Lanka intervenes, the Central Bank of Sri Lanka intervenes in the Forex market to sell, by selling Forex to the market to stabilize the exchange rate. Although there were such selling of foreign exchange during some periods in 2020, the central bank was able to purchase about 300 million US dollars from the market in 2020. If I give you the current situation, thus far in 2021, the rupee has depreciated by about 7% against the US dollar. This is maintained at these levels because without intervention through forex sales by the central bank, and is maintained at these levels because the financial market, as the central bank, and I'm sure several I mean the people also understand that the exchange rate depreciation might not help the resolve the current situation in the foreign exchange market. The official reserves are estimated at 4.4 billion US dollars, and it does not include the 3-year bilateral currency swap facility signed with the People's Bank of China. So that provides us another US dollars 1.5 billion, which is on top of this 4 billion US dollars of official reserves. And thus far in 2021 also, we have been able to purchase about 130 million US dollars from the market. And from June 2021 onwards, there are systematic methods to continue purchases of foreign currency to the central bank to strengthen reserves. In particular, we are now purchasing a small portion of export proceeds coming to the country on a mandatory basis. And we are also purchasing 10% of workers' remittance conversions that the banking sector is experiencing. So that should also give us about 650 to 700 million US dollars per year as non-debt creating inflows to the central bank reserves. So if I give you an average sovereign bond issuance size, it's about 1 billion US dollars, and we are trying to raise the same amount of money without going back to the so I'm being very careful here, just because of the risk of being misquoted. So the options for Sri Lanka is whether to build the country with debt inflows or whether to build the country with non-debt creating inflows. When we say non-debt creating inflows, we are talking about earnings in terms of exports or remittances and so on, and direct investment inflows. So obviously there is a broad understanding that that should be the way forward. So until that happens, I think Sri Lanka will have to access the short-term debt market as well. So that is also happening, and the government, the central bank, the financial sector, and the corporate sector, they are all helping the country to manage this short-term situation. So what I was trying to say is that we have a system to purchase about 700 million US dollars from the market on a systematic basis through export proceed conversions and workers remittance conversions. So that 700 million, if I compare an annual issuance size of a sovereign bond, it's quite similar, and I think that this strategy should continue to the medium term as well. Moving on to the fiscal sector, I will be very brief there. The fiscal policy, or the government revenue and expenditure policy, was reoriented towards supporting an ailing economy at the turn of the year. But as we know, fiscal operations were faced with significant challenges during 2020 because of the pandemic, and the overall fiscal outcome, as we saw, was weaker than initially expected. So the government continued to support businesses and individuals amidst very difficult circumstances. At the beginning, it was deliberate. The government wanted to stimulate the economy through fiscal stimulus, reduced taxes, and so on. But then came COVID, that made the recovery process for economic activity very, very difficult. So revenue as a percentage of GDP declined to 9.1% in 2020, as I said before. And expenditure and net lending also declined, but within this, recurrent expenditure increased, and it was capital expenditure that saw a reduction. And so obviously, this is not a development that we would like to see going forward as well. Although in the short term it cannot be prevented, I think we are all thinking and hoping that there will be a process of fiscal consolidation happening sooner rather than later. And looking at the major fiscal indicators, the budget deficit was recorded at 11.1% compared to 9.6% in the previous year. And the current account deficit of the government and the primary deficit also increased in 2020 compared to the previous year. And the financing of the budget deficit was mainly from domestic sources. Essentially, there were repayments of foreign debt and foreign currency denominated debt. And the domestic debt component increased. And it was this repayment of foreign debt without relying on increased foreign debt in 2020 that drove down the foreign debt stock of the government in 2020, which was a good development. If you take the shares of within foreign and domestic shares of central government debt, it improved from 48.52 to 40.60. Moving quickly on to monetary policy, interest rates, and money and credit, we implemented an extremely accommodative monetary policy stance. So as I said, at the end of 2019, we started relaxing monetary policy, but that process accelerated in 2020 with several policy rate cuts and several injections of liquidity to the market. And there were targeted measures supporting the MSME sector and small businesses. And I'm again glad to note that the CMA is also doing quite a bit to entice the government to support the SME sector. So with easing of monetary policy, essentially reducing policy interest rates and pumping liquidity to the market, we saw all market interest rates declining in 2020, and this process has continued into 2021 as well. So during the year 2020, most of the lending rates and deposit rates have declined by a substantial amount. If you look at the lending rates, the prime lending rate has declined by 426 basis points in 2020. The average weighted lending rate, that's the lending rate of the total average weighted rate on the total stock of lending in the banking system, that has declined by 330 basis points. The new lending rate has declined by 442 basis points. So essentially, the message is that if you had a loan at the end of 2019, if it's on flexible interest rates, and by this time, if it has not come down by about 400 basis points, 4 percentage points, maybe you should go back to the bank and ask what is happening. So on the flip side is that even the deposit rates came down. Obviously, banks only perform an intermediary function. If lending rates are to come down, deposit rates will also have to come down, and that also we saw, although not to the same degree of the reduction in lending rates. So with this reduction in lending rates, credit to the private sector started increasing, particularly from August 2020, and we saw a very healthy growth of credit to the private sector in during the last 5 months of 2020, and thus far during 2021 as well. And credit to the private sector grew by 6.5% by 2020, and it was broad-based. Mostly it went towards personal loans and advances, but we saw some acceleration in credit to the other sectors as well. And the credit to the government, of course, also went up by a large amount, and credit to public corporations also increased in 2020. With these, broad money growth accelerated, and we saw broad money growth above 20% in 2000 towards the end of 2020, which is still continuing. And these are some new information I've added from 2021. Essentially, the central bank in the latest monetary policy review, we are expecting another one next week, but until then, we have reaffirmed the commitment to continue the current accommodative monetary policy stance. And also, market deposit and lending rates declined further during the month of May in 2021. And I should also tell you that in 2021, the average weighted lending rate has come down to 9.64%, the historically lowest rate. All the other rates have also come down to historically lowest rates, but especially looking at the average weighted lending rate coming down to single-digit rates means that if you take the entire stock of the lending portfolio of the banks, the average weighted rate of that lending portfolio is now at a single-digit rate, which is a remarkable achievement. I think the country, as a country, we should try to maintain this single-digit interest rate structure for both lending and deposit rates. We have seen some pressure on government securities market yields, but that is coming from the increased borrowing requirement of the government. Private sector credit has continued to increase. We have seen private sector credit now increasing to about 10.5% year-on-year growth during the month of May. Broad money growth is now at 21%. Moving very quickly on to the financial sector performance. The banking sector exhibited moderate growth in 2020. We know the challenges the sector faced, but still the banking sector showed a lot of resilience with very comfortable liquidity positions. And performance of the LFCs and SLC sector, when you think of it as a sector, it deteriorated in 2020. But we know that even within this, there are several excellent, well-performing finance companies. So you cannot generalize what's happening in the LFCs and SLC sector. But again, with their dependence on trade financing, I think they were also facing quite a bit of challenges in 2020. The stock market recovered in 2020. We saw a lot of activity in the stock market in 2020, and thus far in 2021 as well. But when you think of foreign activity in the stock market, we have continued to see foreign outflows from the stock market, although they are at very low amounts. The annual report also talks about issues and policies. Again, if you look at chapter 1 of the annual report, you see that several issues and policies are discussed. This has been a practice in the annual report. So this is not only for policymakers, it's for the general public also to understand what kind of issues the country faces and what kind of policies that we require. So before criticizing the central bank, I would urge the general public also to go through the material that we put out so that you can get a clearer picture of what our thinking. So these are some of the issues. Professor, do we have about 5 minutes more? Or?
You can continue, no problem.
Okay, thank you. So just 4 more slides. So if I give you a very brief overview of issues and policies, we've talked about sluggish improvement in productivity. We've talked about the need to prioritizing export promotion, the need to enhance services exports, need to keep the tourism sector functioning in the new normal. Again, this was before the third wave, but we think that the domestic tourists should also continue to patronize the tourism sector, so that they could function under these difficult circumstances as well. Another point is about the port city. We believe that the port city will be a game changer, and we believe that there will be numerous socioeconomic benefits to the country if it's done right. So at this time of inception, I think we should try to get the port city related developments right, so that we reap the intended benefits from the port city project. We've discussed the failure to attract sizable FDIs. Hopefully this will change with emphasis on port city as well as other industrial zones around the country. And we think that there should be export-oriented FDIs, particularly merchandise export-oriented FDIs. What we have seen is that the FDIs that we have received thus far, they are either service-related or infrastructure-related. And most of those are provided to the local economy. So we have not seen the benefit of increased earnings from this kind of FDIs. Also, the improving the external current account balance and the fiscal balance is discussed, and the major fiscal challenges, which includes the list is very long: persistent low revenue, rigid recurrent expenditure, rising financing needs, and the issues in the SOBs. I think they are all discussed, and again, I would urge the management accountants to play an increasingly bigger role in helping the country to manage some of these challenges as well. And we've discussed food self-sufficiency and the fragilities and vulnerabilities in the Sri Lanka's labor force, and need for urgent labor market reforms. And we know that there is no pension system for the entire country, and the population is fast aging. And also at the same time, we saw the repercussions of not having a proper social security system in Sri Lanka. If we have a nationwide contributory pension and social security system, I think that would resolve most of the social issues that we see in Sri Lanka, as well as that would also give us a better framework to cope with tragedies like the COVID pandemic, as we saw in 2020 and 2021. And we've discussed the need to strengthen MSMEs and support MSMEs for the generation of inclusive and sustainable growth. And we have discussed the financial sector of Sri Lanka to the need of the financial sector of Sri Lanka to evolve fast. And again, I must congratulate CMA for focusing on new areas like data analytics and so on, so that the digitalization of the financial sector as well as the entire economy gets captured in a better way, and we are ready for that kind of challenges as well. And again, we warned the general public that interest rates are quite low, although we are trying to retain a positive real interest rate for the depositors. But we have seen in the past is that whenever this happens, the various parties, interested parties, they try to offer the depositors, the people, various kinds of opportunities, which are actually bogus opportunities, to attract their deposits from people who are looking for a better return. But obviously, I mean, these schemes will fail, and the depositors, the savers will suffer. So that's also a key message that we've tried to give. And again, going back to digitalization, we've discussed the need for the increased usage of digital payments methods, as well as the risks associated with those. We have also discussed the environmental issues, and also finally the accurate and timely data, because I mean the accurate and timely data play a key role in information-based societies. So those are some of the challenges that we've highlighted, and I will stop there. And usually in the central bank annual reports, we include several box articles on topical issues as well. And I would invite you to look at some of those box articles also when you have time. So thank you very much, all of you, for listening to me. And if you have any questions, I'll be very happy to answer. Thank you very much.
Thank you very much, Dr. Chandranath Amerasekera. I think you have gone through in very detail. I think you have given a concise statement of the annual report. There are a number of questions that are there, and I will ask our colleague and council member, Mr. Ruchira Perera, to ask those. But I just noticed two matters which I think are of current importance. So Ruchira, I'll just take those two before you start. That is really on the current exchange rate and the difficulties faced by many in opening letters of credit. If you can maybe comment on those two, that would be very useful.
Thank you very much. I think there was a recent time, this Monday, Governor issued a press statement explaining the forex market situation. So I will quote Governor on that. So essentially what he's trying to say is that the current situation in the forex market is temporary. We know the debt service challenge that we have. At the same time, there is a lot of speculation in the market that the exchange rate would depreciate and so on. So whenever there is that kind of speculation in the market, what we have seen is exporters hold back converting their earnings. Not only exporters, even the workers' remittances could be held back. Other earners would also hold back their earnings. At the same time, the importers would advance their bookings. So that would naturally increase the pressure on the forex market. So that's what is seen in the forex market at the moment. And the central bank and the financial sector, the banking institutions in particular, we are working very closely to ensure that the essential import bills are being met. And I think in Governor's statement, he also explains that if you really think of we've also heard about these complaints that LCs are not allowed to be opened and so on. But if you really think of the behavior of imports in the past, past 3 months during March, April, May, we have seen a very large amount of imports coming to the country. Obviously, when you look at the figures, it does not match with the story that the banking sector is not facilitating imports. So it is happening. It's just that we are also trying to discourage speculative type of imports happening at this point of time, because that will only add pressure to the economy, unnecessary pressure to the economy, and the situation could become unmanageable if this continues. So that's what we are trying to resolve at the moment, working very closely with the financial sector. And I should also tell you that if a bank opens an LC, they are bound to honor that LC. So there is no issue about it. It's just that walk-in customers coming to probably to new banks to open LCs of unthinkable magnitudes. And most of the complaints are coming from that. About the exchange rate, again, we believe that the pressure on the exchange rate is temporary. There will be short-term fluctuations in the exchange rate. In the past also, we have seen if you take Sri Lanka's history throughout if you take the entire history, we know the amount of depreciation that we have seen, but there have been episodes of appreciation also. There are at least 3 years. If you take the past decades, there are at least 2 or 3 years where we have seen an annual appreciation. So the exchange rate can go either way. Just that we don't want the market to speculate on the exchange rate too much. And I saw a question on the chat about the 5-year forecast of the exchange rate. We don't forecast the exchange rate. That's not done by any central bank around the world. Thank you.
Thank you, Dr. Chandranath. Ruchira, maybe you can go through the questions so that Dr. Chandranath can answer them.
Thank you, Professor. Thank you, Doctor. Doctor, your presentation was very informative, and I think the audience has taken it to greater lighting by looking at the number of questions that they have asked on the presentation. So maybe we may not have time to go through all the questions. So we will at least select some of these important questions, and I will post these questions to you. So maybe you can give your insights on those. Sure. So Doctor, the first question being asked is about the Sri Lanka's credit rating. So currently, as we know, it stands at CCC+. So the question is, what could be the future impact of this to Sri Lanka's economy, especially for FDIs?
Sorry, can you repeat the second part of the question?
Yeah, the impact of Sri Lanka's credit rating to the foreign direct investment.
Right. You're absolutely right. We are not very happy about the credit rating of Sri Lanka at the moment. We believe that some of the rating downgrades are unjustified. We cannot justify some of those downgrades, but that gives the message to Sri Lanka that we have to get the macroeconomic house in order. Essentially, I think the rating agencies are looking at the Sri Lanka's ability to repay its debt, and also the strength of the fiscal sector and the strength of the external sector. On top of that, for us to do all that, we need a strong economy. The economy has to rebound for us to have a better fiscal sector as well as a better external sector. So it's a very difficult task that the government and the central bank is trying to do. But if you look at the impact of credit ratings and FDI, I think more than foreign direct investment, it is portfolio investment flows that are mostly affected by FDIs, by credit ratings. So what kind of portfolio investment flows are we talking about? The rupee, foreign investments in the government securities market. So right now we only have a very limited amount as foreign investment in the government securities market. So whether so even at this rating level, we are not worried about that part of investment. Of course, I mean, if there is an improvement, there will be inflows. Of course, if there is an improvement, our access to the international capital market also would be better. But if you look at FDIs per se, I think the foreign direct investors are more interested in domestic economic activity and the domestic economic policies, supportive policies, and the doing business environment. So the port city will definitely provide an avenue for foreign investors to operate within a better doing business environment. And I hope that the rest of the country will also be able to emulate the better doing business environment that hopefully the port city will introduce to Sri Lanka. So and also what we have seen is even during the most difficult times that we have that Sri Lanka has gone through in the past, we have seen FDI inflows. So how the foreign direct investors operate, I think their thinking is different to any other type of investor. They have a long-term view and they will take a long-term view on Sri Lanka. In terms of inflation, in terms of exchange rate stability, in terms of our controls on our regulations and non-regulation of exports and imports, those will be looked at by foreign direct investments. But I also should mention that Professor Whatever is probably a better person to answer this question, being the former chairman of the BOI.
Thank you, Dr. Chandranath. Just to maybe based on what was said on the credit rating, are we looking at going to IMF for assistance?
That's a question that is asked by several investors and local parties as well. So again, I think there is a misunderstanding of this engagement with the IMF. Of course, we are working with the IMF, and Sri Lanka has been working with the IMF, and even in I'm not sure whether I'm supposed to say this, even in July, during this month, we are expecting an Article 4 mission from the IMF. It's going to be a virtual mission. So those discussions on the economic conditions are continuing. And we've never stopped those. And the technical assistance that Sri Lanka is receiving from the IMF is also continuing. And in addition, there is going to be a global allocation of SDR, the global currency, of $650 billion US. It's coming in August, and Sri Lanka's allocation of out of that is going to be close to US $800 million. So that's also helicopter money. I mean, essentially, I mean, we are not. It's not a loan. It's not a grant. It's something that we should receive due to the membership of Sri Lanka in the IMF. So that kind of relations are continuing. It's just that the government has not decided to go for a condition-based loan from the IMF that I think the market is talking about. Yeah, that's right now the decision is that the government will not approach the IMF for the time being for a condition-based loan. Thank you.
Thank you, Dr. Over to you, Ruchira.
Yeah, doctor, another question has been asked about cryptocurrency. I know cryptocurrency is not regulated right now. So question is they are asking whether there is any plan for the regulation of cryptocurrency in the future.
Right. I think so. The best person to ask this question from the central bank is someone from the Payments and Settlements Department. If the gentleman or lady is interested, they can probably send us an email and we can probably give a detailed response. But globally, what we have seen is that there has been a crackdown of cryptocurrencies across the globe because the dangers of those are being understood more and more. At the same time, the central banks around the globe are also focusing on issuing their own digital currencies. So central bank digital currencies, that drive is also continuing. So internally also there are several discussions about these. I'm not in a position to say much about this at the moment in terms of the central bank policy in relation to those, but I just wanted to highlight the global developments with these.
Doctor, there is another question on the money printing. So two people have asked actually how money printing, which leads to inflation, can be managed.
Right. So again, the question I would like to ask back is whether we've seen this question. I mean, we see this question again and again. What I'm wondering is whether the people who ask this question really understands what money printing is, because honestly, I don't, because there is no official definition for money printing. I mean, maybe it's about the amount of currency notes printed in the economy. Maybe it's about the increase in what we call the high-powered money, base money, or reserve money of the central bank. Maybe it's about the treasury bill holdings, the increase in treasury bill holdings of the central bank. So there is no clear definition of what is commonly called money printing. So so having said that, I think why right now we are in a flexible inflation targeting framework, and in spite of the challenges and disruptions that we have seen to the monetary policy framework in the recent past because of the COVID-related disruptions, what we have been saying continuously in the past, at least the past 5, 6, 7, 8, even 10 years, is that there is no close relationship between the amount of money in the economy and inflation. So you would be a believer of monetary targeting if we saw a close relationship between money growth and inflation, and we have not seen that in the past, and that's one reason why we moved away from a monetary policy framework to a flexible inflation targeting framework. So this is something that we have seen in the other countries also. In almost all countries, the relationship between money and inflation has been broken down to a large extent. So there is definitely no one-to-one relationship between money growth and inflation, and we maintain our stance on that as it is. But having said that, being a central bank, we are cautious. We are very worried about price stability, inflation, the behavior of inflation. So we are watching, in addition to our inflation projections, in addition to our projections about the output gap, in addition to our projections about the other variables in the economy, we are also closely watching money growth, credit to the government, and so on. I think what is more important for the general public should be whether there is an inflationary pressure and whether there could be an inflationary pressure in the future. And right now, our projections or the actual developments do not show that happening. So I think, and also one more thing to add to that, I think there was a lot of talk about the central bank's holding of treasury bills increasing above 1 trillion rupees. This was in the media, But I think the next day, the following day, it came down by the same amount. So it came back to the amount that was there the previous day before this increase that we saw for a day. No one spoke about that. So, so essentially, I mean, there's a lot of talk out there, which is actually destabilizing the economy and which has no basis. So, I mean, we have to be mindful of those developments as well.
So, Doctor, there is another question on the balance of payments. So, by taking into account what is happening around now, what are the actions or what are the strategies to minimize the balance of payment in this year and the next year, since we can't rely on tourism and foreign remittances?
Thank you very much. Yes. So as I said, tourism is something that used to get us about $4.5 billion, and by now earnings should have ideally been more than $5 billion US. But about the balance of payments, I think the strategy is very clear. As a country, if we are to progress, we have to looking at the current account side of the balance of payments, we have to reduce the trade gap, the trade deficit that we see by increasing exports, reducing imports. Reducing imports is very challenging because we are totally dependent, mostly dependent on imported energy to fulfill our energy requirement. And the domestic industries also depend on imported inputs for production, for exports, as well as for domestic consumption. So it's easier said than done, but improving exports is a key strategy. It has to be focused on. We need that should be given number one priority in the country. And in addition, I think looking at the financial sector, so when I say exports, it's both merchandise and services exports. And in addition, in the financial account of the balance of payments, we have to focus on, as you said earlier, direct investment inflows as the way forward. We cannot depend on debt related inflows in the medium term or in the long term. It has to be that that focus has to be shifted to non-debt creating inflows. Thank you.
So, Doctor, connected to that, connected to foreign remittances, there is another question asking whether central bank is aware of the bottlenecks in terms of policies, regulation, and other financial aspects when it comes to foreign remittances.
Yes, we are aware of it, and so it's not a it's a global issue. So essentially, we are aware of the financial costs in related to remittances, and there are several work groups within the central bank working on that to reduce those financial costs. But the costs can arise from our side as well as the other side of the transaction. At the same time, we know that several countries are focusing on digital modes of payment, and the discussions on those are also ongoing to improve our payment and settlement systems to support low-cost remittances to the country. Also, I think I should mention that the banking sector, the several banks are also facilitating the inflow of remittances through several innovative methods that they are using to collect them from the destinations and remit them to the end user. Thank you.
Doctor, there is another question. I am not sure that this comes under your purview. It refers to the central bank annual report, where he has mentioned the page number also, page number 39, chapter 2. As per him, he says, the report says Fdi growth, Fdi grew by 11.5% in 2020, and it was mentioned that it is sufficient for 17 months. So why are we in the process of importing 100 metric tons of Fdi? The question is about that. Why there is a conflict of the two statements, in the sense what is reported in the central bank annual report and
Sure.
what we are going to do now.
Sure. So the source for data on particularly on the real sector is the Department of Census and Statistics and the Department of Agriculture. So essentially, I mean, we don't go to the field and collect this data whenever data is available from another source. Having said that, I think this was raised in some newspaper articles also, if I'm not mistaken, recently. But having said that, I think if I try to explain what is happening, essentially we know that there were restrictions on imports of several related items in 2020, particularly animal feed. And so there have been several other items also restricted in terms of imports. So I'm not saying that a large part of this went into a large part of that demand went as demand for paddy or rice, but it is quite possible that a part of that demand also affected the rice availability of the country. So that's one reason. And then we know the allegations about hoarding, and so no one knows the actual situation about this. We know that we have seen from the media and the press that the Consumer Affairs Authority and several other authorities are working on resolving those. In addition, I think the domestic usage of rice for the production of other agro-based goods has also increased in recent times. That also could have affected the availability of rice in the market. So those are the three things that I can think of. An expert on agriculture will be able to explain this more, but that's the only information that I can provide.
Professor, can we go a little bit more? I mean, now we have gone past the time.
Maybe two more questions. Yeah.
Yeah, doctor. Now, in that case, now another question is about the foreign remittance conversion. 10% of foreign remittance conversion. Can you clarify about that?
Right. So there was a proposal in the budget that the government would provide an additional 2 rupees for workers' remittances converted into rupees. So our thinking is that if the government is spending money on encouraging workers' remittances, then as a country, we should also be able to purchase a part of those workers' remittances converted into rupees into the official reserve of the country, and that's what we have done. So what we have told the market, what we have told the banking community is that out of the workers' remittances converted, say you see $100 million conversion in workers' remittances, out of that, sell to the central bank 10%. And that's happening right now, and that's one way for the central bank to build up the non-debt creating reserves that we were talking about earlier. So the government provides an incentive allowance to attract more workers' remittances and to convert them into rupees. And out of those conversions, the central bank absorbs a part of that, 10%. So 90% is left with the financial market. We purchase 10% of that.
Thank you, doctor. So, doctor, this is the final question. So I will quickly read that. Assuming an international sea link roadways, it's a long question, sea link roadways route, in addition to the existing waterways route between Sri Lanka and India, Singapore, and Indonesia. So connecting all these countries is developed. This augurs well for boosting foreign trade significantly, and rise in exports will tend to significantly appreciate the Sri Lankan currency. What is your viewpoint on boosting exports by mean of the central bank funding these projects with FDI?
I'm sorry, I think you'll have to repeat the question. I didn't.
Yeah, it's basically asking about international sea link roadways connecting countries like Sri Lanka, India, Singapore, and Indonesia. So his question is basically, will it appreciate the Sri Lankan currency significantly because of boosting the international trade?
Yeah, definitely. I mean, so we know that as a country, we are located in the middle of the east-west trade route, and in a very strategically very important location. So if there is an improvement in trade flows, that will definitely help the country to attract more foreign investment, foreign inflows. And when that happens, we can expect an appreciation in the currency as well. And several other countries have seen that kind of developments.
Here, the person is asking, Doctor, whether the central bank will fund these projects with the FDIs.
Sorry?
I don't think, maybe I think we'll take it later. Yeah. Okay.
Yes.
So thank you, Ruchira. Thank you very much, Dr. Chandranath Amerasekera. I think you have had a long session with us, because as you know, this is a topic that is of great importance to everyone. It's really not only the management accountants or financial accountants, but everyone who is having a business or trade or whatever that they're having. I'm indeed happy that some of the matters that you have raised, of course, from CMA point of view, we are taking action. Of course, the MSME that you mentioned, we just had the UN International, we celebrated that, the UN International MSME Day. And the two matters, one of course was the credit guarantee institution, which I think you all are also supporting. Other one, of course, is the export houses for the small and medium sector. Now, we are having only 5%. And we are hoping that if the government gives us accepts our proposal, that it can go up to 25% within the next 3 years. So these are certain things that we are doing, and I'm sure that the lecture that you gave today on the annual report plus the what is happening today has certainly helped us. And if you really see the background, it's all on value creation. So I think that's something that we are looking at. I think because we need to have discipline. I think everyone looks at the government sector, but unless the people are disciplined, if the private sector is disciplined, I think if we follow discipline, I think a lot of these things can be sorted out. Because when I say discipline, it's not only discipline in our own various ways that we are active, but in the commercial field, discipline in the commercial field, discipline in our business. These are all which are inbuilt, and all will give the value creation. So thank you very much. I think we are very, very pleased with what you have done, accepting our invitation. I will now invite our Vice President, Mr. Hennaik Bandari, is Vice President of our CMA, and also now CMA, or also part of the South Asian Federation of Accountants. This time we are going to head the South Asian Federation of Accountants, and we have the Vice President, Mr. Hennaik is the Vice President. So you can see the recognition. Although we are local, we have now gained regional and global recognition. And I think both from the private sector and public sector, they must give recognition to us and obtain our services in order that this country could create the value that we are looking at. So maybe over to you, Mr. Hennaik.
Thank you, Professor. Ladies and gentlemen, on behalf of CMA, I'm glad to propose this vote of thanks after a successful webinar and discussion conducted by Dr. Chandranath Amerasekera about Sri Lanka's economic performance in 2020 and issues and challenges facing Sri Lankan economy. Dr. Chandranath is not really a stranger to CMA, and he has supported CMA in the past as well as in conducting CPD programs on the same subject area. With that note, I would like to thank Dr. Chandranath for his insightful presentation and taking time off to share his knowledge to educate us on the current status of the economy I think the clarifications provided by him will assist all of us to enhance our knowledge. Let me also thank our President, Professor Lakshmana Vatavela, for organizing this webinar under the CPD programs to improve the skills of our members and others. I also would like to thank all our council members, members of the Institute and others for your participation, and the CMA team for the support extended to conduct a timely, important webinar. Thank you and stay safe. Thank you, Doctor.
Thank you very much. Thank you.
Thank you.
Thanks a lot, Dr.
Thank you.
Chandranath. I look forward to see you maybe later
No problem
once.
at all. Thank you very
Okay.
I see some very interesting questions. If
Yeah.
Ruchira can copy them and send it to me, I'll.
Yeah.
Sure, Doctor. We can do that.
Doctor, also there was, I think some of them are asking for the presentation. So if you are able to.
I will share it with you.
Right. Okay. So thank you very much.
Thank
And
you.
Thank you, Doctor.
yeah, okay, right.
Thank
Bye.
you.
Bye.
Thank you.
Thank
Bye.
you.
Thanks, Ruchira. Thanks for presenting.
Thank you, Doctor. Thank you all.
Thank you, Mr. Nayak. Thanks,
Thanks,
Ravi.
Nayak.
Bye.
Okay, right. Thank you, everyone. Thanks, Professor Harendra.
Thank you, Professor.
Yeah, good. Okay. Thank you then.